All right. So this is actually very interesting. I opened X really quick, and Jamie Powell says the DOJ is threatening the Federal Reserve with criminal charges over his refusal to comply with President Trump's interest rate demands. And now the market is kind of tanking a little bit, down 0.5%. My entire feed is literally down. Like I'm just scrolling. My entire feed is just that. That's crazy. Uh, I'll see how that plays out, but that's definitely interesting. So far, we're down about 0.5% on that news. Testing the bottom of the wedge again, but we are showing some signs of a bounce. Now, of course, Monday open, that's when the liquidity gets in, and we'll see what the real move wants to do. But as of right now, we are kind of holding for now. I wish I could see SPY, or was it SPY, or was it? Yeah, I wish I could see SPY, but we won't be able to see that till tomorrow. But SPY is sitting at the top of this wedge here. Only ES is not. So it is in a very interesting spot because that's a bad catalyst at the top of the wedge, which market's rigged. Always like that, I swear. But let's see what QQQ's at. QQQ could be breaking out to the upside. Could be, but this wedge can also change. But yeah, no, QQQ broke to the upside, rejected higher low and broke to the upside. So QQQ does look a little bit bullish here, although it has been slacking from SPY, which is definitely a bearish divergence. So this QQQ could flip around, or it's going to mean two things. If SPY plays out and it's whatever, because there's a lot of news this week and it goes bad, and then SPY ends up flipping around and dumping, then QQQ will also dump a lot more than SPY, I would think. But the other way around, if the news comes out good and stuff like that, then SPY would also rip. QQQ would rip more overall, I think. Or yeah, I would think QQQ rips more than SPY, which is a little bit contradicting of the setup. But QQQ, I would say, probably is going to rip more. Tech stocks and crap mainly because of this setup with QQQ of it breaking out already. But usually when it comes to divergences, since QQQ does have the weaker divergence, SPY would go up more. But off of this chart alone, I think QQQ would start to outperform more because it's going to start making, filling that space up with the divergence. Whereas diverging wants to go back to the mean, if that makes sense. But overall, we are watching this bottom of the trend line for ES and SPY to see how we react to Monday, because it's definitely interesting. I don't see how Trump can get away with that, in my opinion. I guess as the president of the United States, I guess he can do whatever he wants. But from what I see is the Fed is supposed to be independent and it's not supposed to listen to any politics. And so if he listened to the president of the United States, that would definitely, I think, not be with the rules. So we'll see how that plays out. But let's go over to Bitcoin real quick. So Bitcoin is still inside this choppy price action, but we did end up rejecting my key level at 94,000. So we'll see how this plays out. But so far, that is a rejection. But we didn't form an inverse fair value gap yet, at least not on the daily. The 4-hour we do. So we can expect a rejection somewhere right around here if we want to go lower. I'm going to delete I'm not keep this zone here, but just for eyeballing going to this week, this would be the zone we're looking for rejection, because we reject the resistance, right? Which is at the key level, reject the key level. This would be the nearest support zone. Okay, we close below support and now acts as resistance. So a lower high would be in play off of this rejection to this zone. And it's the same step I do for my strategy for every single stock. It's literally the same thing for entry, right? Bounce at key level, bounce at the support zone, the buy zone, break the nearest resistance, and then bounce at the nearest support. Okay, so this is the opposite, right? Close below the nearest support and then reject the nearest resistance, which would also most of the time be the old support level. But I do expect Bitcoin to reject that level, and then we can hopefully dump to see at least 80,000, preferably 76,000. But if for some reason we are super bullish for crypto, then I do want to see it close above 94,000, 94,500, and then we can run to 98,000, almost 99,000. And then hopefully if it closes above that, then we can start targeting the actual $156,000 target for wave 5. But for now, I do expect a rejection and a push lower. I am still holding my shorts. I've been holding for a while. I mean, I literally, as soon as we touch this level, I enter shorts. So I basically shorted the exact top. Not recommended, but that's what I did. So hopefully we do end up pushing down to 6K. That would be absolutely fantastic. Let's look at ETH. Haven't looked at ETH in a while. Straight sideways. Terrible. Terrible, terrible, terrible. Nothing to really cover here. Sol, probably the same thing. Yeah. Doge, XRP. Yeah, they're all pretty bad. XRP did form a really big bullish fair value gap on the weekly time frame. That could actually be good. We invalidated resistance and then closed, and now formed support. So higher low could be good, but we still need to break above that key level. If that's even accurate, that may not be accurate. No, it is. It's accurate. Okay. So yeah, we need to close above that key level on the weekly, and that could be bullish. But again, we'll need to see Bitcoin break above our key levels here if we want to see that, which I don't think will happen. So, well, I already went over SPY and ES, but IWM maybe. Yeah, we're still in the sell zone, so nothing much to really watch for IWM. Bears, yeah, the Bears divergence is still in play. So overall, nothing much to watch here. Nothing has really changed. I mean, we didn't really break to the upside to anything, and we're still just sitting at the bottom of the support zone. So until we make a strong move and start to rejecting one of these trend lines or something, then we'll see. But as of right now, we're not really doing much. So, and one thing I see people talk about this on X, and they always talk trash. People use trend lines like, oh, they always move their trend lines, always move it. Charting doesn't work and all that crap. Trend lines are very tricky, especially on SPY and SPX and ES crap like that. They always change. They always change. Like there's a million ways you can draw a trend line. Okay. Now, one of the ways will be correct, but you have to make sure it's correct before. Like you can change it nonstop. Like this could be a wedge, this could be a triangle, this could be a channel. Who freaking knows, right? Maybe the wedge starts here. Actually, most likely probably will start there, or maybe you force it here. Like who knows? But just want to say, just because your wedge or trend line changes does not mean it's not right, right? It just means the way you placed it was wrong. VIX, I don't think it's really much in VIX. Yeah, there's pretty choppy here near lows. But yeah, I think that's basically over the market. Let's move on to basic stocks. Nike did poke its head out, but again, it really depends on how you draw the trend line, because I could draw it like this. I could draw it like this. I can draw a million different ways, but there is a possibility that we broke to the upside here. Very well possible. Yeah, it's possible. So if we did break to the upside, then we're going to be looking for a retest this week, and then hopefully we can see $80 fairly quickly. This is pretty bullish. We did go down and fill this gap in for the most part. Halfway filled it. So not a great look. If we do end up making a false breakout, then we would be targeting $61 for the next pullback. But as of now, this could look like a pullback here. Monday, I expect a retest, and then hopefully we pump. Unless the market tanks and the news or data that comes out is terrible, then we'll probably end up seeing 61.22 for that higher low zone. But until then, this does look pretty good here. This is my second biggest position because Zeta is my biggest. And what a freaking week. Like last week was absolutely insane. Insane week. So, which was expected, but man, it definitely flew a lot more than I was expecting. But I was expecting a decent pop last week, but this was a little bit more. That was about a 22.5% gain last week. Just crazy, right? And this proves when we break above a trend line, break above a bull flag, break above a wedge, triangle, whatever it is, price gets very violent, and we do see the top of that wedge or whatever really quickly, and which was $22, and which that's what I've been saying for a while now, and or ever since we broke out. And so we not only do we see $22, we're at $24.50, right, and almost at the $26 resistance zone. So next week I'm expecting we could either chop all this week, but I don't think so. Looking at is that a purely, yeah, we're probably going to chop, but this market this week, at least everyone's saying a lot of data and a lot of crap going on. There's going to be a lot of news and a lot of catalysts coming out this week. So if that's the case, then Zeta, I do expect to see $26 this week. And to be honest, most likely a rejection. I mean, this is just huge candle. Like we left a gap open here. We're going to want to fill that. So I'm thinking we reject this purple zone, go down, fill this gap, and then we see higher and go up to our wave 3 target. Okay. Now I see everyone X screaming, we're going to see all-time high really soon. Will that happen? Most likely not. I mean, anything's possible. You know, Zeta is still a small cap, so fairly like it literally IPO'd in 2021, near the end of 2021 or mid of 2021. So it's still a fairly new stock. I mean, it could absolutely if you want to pull a PLTR, but I do not think so at all. You know, I'm gonna be realistic. I think $32 is a fair target for wave 3, and then $26 is a fair target for the short-term bull run, short-term pop, I guess you can say, before we pull back some more. But overall, what an absolutely just amazing setup. You know, we've been preaching about this setup for a while now. This bull flag looked absolutely fantastic. So overall, what a great setup. Still more to go, but this is definitely the place to buy at all. Lululemon, I do expect the higher low to start forming. Maybe a pullback to 188. When it goes to the daily, yeah, a gap at 188 that will get filled for sure. It's a big gap on earnings. It's going to get filled. But now what's good is that that gap is there for us to hold as support. So when we do pull back, there's more reason to hold it and actually bounce, which we will. And once we bounce, that gives you another entry point. Okay. For those who watched my video on X, I posted a couple hours ago. I kind of talked about stocks like this, right? And it basically, for those who didn't watch it basically went over two assets and which one you'd rather be in, right? The first asset that was very steady, right? So if we go to like JP Morgan, right? There's one asset that's like this where you just DCA into, every single day, every single week, every single month, whatever, you start buying it nonstop, right? And then you're always going to gain, right? But you're not making big gains, right? So let's say JP Morgan is at $10. You buy it at $10, right? You can afford you can afford 5 shares at $10, and then it runs to 30, right? Well, then you just made 200% gain on those 5 shares, versus a stock like Lulu, where you buy it on a really good discount, a steep pullback on this higher low with a bullish structure, and then you buy 10 shares at $5 and then let it run to 30. So, of course, if you just started DCAing into Lulu since like 2021, you would be red, right? This is where the long-term holders got absolutely screwed. But the short-term traders like me, or like people who use my waves, my charts, crap like that, they're intermediate, right? They just catch the trends. So for us, this is good, right? Because on the other end, when you buy that stock at 5 and it goes to 30, right? It also crashes right back down to 5 or maybe to 3 or maybe to 10, right? And maybe we'll end the year break even or a little bit red or whatever, right? So this is why I kind of love doing intermediate trading and not the long-term investing. Of course, over the long run, maybe long-term investing might come out ahead. I'm not completely sure, but I just know what I'm best at is intermediate trading like this. So it's just something to keep in mind is we're not trying to buy stocks that are slowly going up or anything like that. We're trying to get in stuff like Zeta or like Nike, right? When this long-term, or not long-term, but the intermediate chart within a few months is a big channel that could push up a lot really fast, up to $80. That's kind of positions that we're watching, which is why Nike is number 1 or number 2 now, and then Zeta is number 1 in our positions, right? And then there's Lulu. Lulu's going to catch up eventually. We'll hold this higher low. But then, again, target remains at 335. Pretty nice. Let's say at 188, that's going to be, 78% gain from that level, which is crazy. Really good opportunity if you hold it, which I think we will. Massive long-term bullish outside divergence, like just massive one. Super bullish here. OPFI, again, pretty great setup. From what I just said, I think you'll see that I absolutely love setups with patterns in it, which is a wedge, bull flag, triangle, whatever it is, trend line, whatever it is. I love it because it has a lot of volume. It really moves really quickly, which then the bull case is going to play out. So to me, it just seems like super easy money compared to the stocks that don't, that are just, bouncing at the way forward target, and that's kind of it, right? So OPFI here broke above the wedge, and now we retested it, and now we're holding a buy zone. I got a lot of message on X about people asking about this setup, and they're all complaining about the charts wrong and all freaking out about this just because we're chopping for a while, but that's not to say for a while, but for about a month. It's nothing to worry about until we lose this retest level. And as of right now, last week was absolutely fantastic. We held it perfectly. Like, can't really ask for any better of a retest, right? So now we're looking for this level right here to be broken. That would, I guess, be the new key level. But I don't see it being an issue one bit. I think we can easily clear it. And then hopefully we can see $15 really soon, and then hopefully go up to see 20. But $15 can come fairly quickly, I think. UNH, I would love to see 290. I absolutely would. Now, we broke above the bull flag and we didn't, and it's also not really bull flag anymore. So we're inside of a little of a predicament. So we don't have 3 touches at all, right? We have 1 and then 2, and we broke above. So this isn't really a bull flag anymore. Now it's just at resistance zone, which is completely fine. Doesn't mean we're not going to see 290. We also may not see 290. We already hit a buy zone, right? For my first chart, we already hit the buy zone. It is completely valid to go up to wave 3 at $500 plus, right? It's completely valid. Nothing is stopping UNH from doing that. The chart would align with it. Nothing's, saying it won't. Now, based off of my, I can say, intuition, or based off my experience, I do think UNH will see 290, but there's definitely a chance we don't. It is a gamble you're playing. I'm going to play the gamble just because my portfolio is already basically full. I could buy UNH, but I would have to sell a position, which I could. And if we see 290, I absolutely will. But for me, I'm not going to play that game because I have Zeta, Nike, Lulu, OPFI, and stuff like that. So I'm not too concerned here if I miss the move. But, if you want to hold, especially long term, you want to be selling now. But if you were targeting that for my wave 3 target, then it's not a terrible buy. I mean, there's definitely worse. Although I would wait for a buy that's not, rejecting resistance here. So I'm going to keep this bull flag here just in case, because I'm very curious how it's going to play out. But I don't see this playing out right now since we're technically above it. But again, you can draw it in many different ways. Maybe, we'll see how it plays out. But I do want to see 290. That would be an absolute blessing. Duolingo, I know a lot of y'all have been watching this, but we're just chopping at this buy zone right now. So, which was kind of expecting. I mean, you look at, I think it's Lulu. Yeah, Lulu chopped forever until we went up and filled this gap at 197. So Duolingo is going to do the same thing. It's going to chop for a while, but eventually we will see 259 for that gap. I mean, it's a massive gap. It's going to get filled, right? So to me, it's kind of easy money in a way because we know the gap's going to get filled. But so a quick trade, sure. Maybe take leaps on it. Definitely could take leaps on it. Actually, I might consider that. But overall, for long term, could be a good buy here. It's not really screaming at me anymore like it was back in September, but it's definitely undervalued for sure. But again, what can go low what's low can always go lower. So we'll see how the set plays out. But as of right now, it's not screaming at me, but it's definitely at a good place and it's at a good value buy. So now that gap is going to get filled. So 259, relatively safe bet that we're going to go up there. Now, will we break above that and actually pump for this wave 5? That's a different question. And this wave 5 target may not be correct. I'll have to double check that. Or actually, this entire elite wave may not be correct. But I'll have to double check that. So, this entire elite wave is not correct. So, I'm just going to head and actually remove this. And we're actually going to start a new one here. it's going to be most likely 1, 2, 3, 4, 5. And now this is ABC correction, and that's probably why we didn't hold the support last time. And then this would be around the 62% fib, I guess, because that is the average correction level. If this is wave 5, 78% fib, we went a lot deeper. But again, it is steep, so yeah, that's definitely correction level. So this is mainly, I guess, the real chart, and so we will not see 540 no more, but we will see 360 for wave 1. If, assuming we're holding this as a buy zone, which that's the 78% fib, I think it's going to hold. So we're going to look at something like this. And then I won't do this yet because we're going to be focused on wave 1. So for wave 1, that's what we're expecting for Duolingo. 355 for wave 1. But first, we need to see this gap to be filled. And where's our key level? Don't have a key level yet. Not great. But doesn't mean we can't see 259. So overall, I think a safe bet to see 259. You could take leaps and so on, but overall, pretty solid. I actually might take leaps on that. If I do, I'll alert it. It depends how expensive they are. We'll see. Path at the retest level, kind of choppy here. I mean, there is a gap to be filled. That's why I don't like it when stocks make gaps. A lot of people love them because make money fast. Sure, if you're, an option swing trade, but if you're in shares, intermediate, long term, whatever, you do not want to see gaps. They gap here, we ran for a while and then we just faded it to fill that gap and then we ran again. Now we made another gap and now we're failing to break out because there's a gap to the downside, right? I do not like gaps. A gapping down could be good, but gapping up, not really, right? Which I'm actually kind of concerned on Zeta. I think Zeta has one. Yeah. Oh, I already went over it, but there's a gap here and there's a gap here. So that's definitely something we're watching. I guess it doesn't necessarily have to fill it, or at least anytime soon. Maybe we didn't fill this gap down here, so we don't have to fill it. It is a small cap, so it may make those gaps and not fill it, but most of the time they will. So I do expect this gap at $22 to get filled for sure, but the one down at 18 may not get filled. But so yeah, for Path we actually might want to go down to 15 to fill that gap, but we'll see what it has in store. There's nothing really to trade off of this yet. It's just chop, nothing to trade. And now maybe once we get to that gap and then we hold out support, then maybe. But until then, no. UPS, man, that's just crazy. I mean, I've been wanting to buy this for forever, but I really want that higher low at 87. So doesn't look like we are going to get it, but it was an absolutely fantastic setup. Absolutely fantastic. I mean, target remains at 140, but absolutely lovely setup. Very undervalued position for sure. Trying to get a good value buy. UPS was not anymore, but it was. I mean, I guess it's still good for long term, but for intermediate term, you're kind of late. So it definitely was one of the top setups I was watching, but definitely not buying here. NVO, I did say, I think it was last week, that China stocks and NVO could pop off. NVO was spot on. We were just absolutely soaring this last week with a gap up. Broke above our key level. We are currently above a break of structure in the weekly time frame. Now we need to close above it for this entire monthly candle, which we have about 18 days left, basically 19 days left. So we still got a lot of time to break above this break of structure level. But key level, we are above, which is amazing. I mean, now we're waiting for a higher low. Higher low would come to fill in this gap down at 52, and that would be absolutely fantastic if we do. But overall, I want us to either keep going up or chop above this 56-star level until the end of January, and then at the start of February, pull back, hit that key level, fill in that gap, and then we absolutely start our move up to $92. That is kind of the plan for this next couple of months for NVO, but overall, amazing setup. I know I've been screaming this since July, but whenever we hit this buy zone, August. Now, I know we said that we had a higher low there, which was true, but we rejected resistance, but we did hold a higher low there. But overall, in the grand scheme of things, it wasn't really going to matter. We're already back above that price. We never really actually broke to the downside. We just broke the higher low, but overall, if you're trying to look for like a long-term setup, this was, even our call we did back in September and August was perfectly fine. So overall, do low setup, targeting $92 for that wave 1. CMG, pretty bullish. We had the high low zone, but not. I would say it's more of holding support than holding a higher low zone because there's not really a higher low made. It just soared as soon as we hit it, so there's no actual higher low made. But overall, it was a nice setup. I do want a higher low though. I think we're going up to fill this gap. Yeah. Oh, gap is already filled. So I will expect a down move pretty soon for CMG, but overall, it was definitely undervalued position. JD just chopped, just consolidated. Let's actually look at BABA because I know I called out Chinese stocks and I don't think they really moved much. So let's see. I know NVO did was one of them, not Chinese stock, but it moved. Yeah. So BABA, it did hold the retest level. That's definitely promising. Not promising for SPY, and especially since we're down a lot pre-market. So BABA could absolutely print tomorrow at open, but as of right now, we are holding this retest level. Let's go down to daily. Yeah, we held that retest level. So Chinese stocks could start picking up. Now let's actually go look. Well, let's cover AMD real quick. It's gonna fill the gap. I know I've been screaming about this, but it's gonna fill that gap. This is a big company. It's a huge gap. It's gonna get filled. OSCR, I don't really watch anymore. It's just been choppy. But I do want to see a break of that trend line. But now let's look at the HSI index. Okay, so broke above, rejected resistance, came down. Possibly we might retest it this week, breakout, but we kind of already did last week, so I don't think so. So, yeah, no, I think this week could be very, very interesting for Chinese stocks, and so this is kind of what the market is really showing. Right, we're getting a lot of data this week. A lot of people are saying, and now Trump is trying to push charges and crap against the Fed and stuff like that. So, SPY is rejecting top of the wedge. ES is bouncing the bottom of the wedge. Both are bearish wedges. And so QQQ is showing a bullish breakout to the upside. But most of them are showing downside, almost all of them other than QQQ. Which even QQQ still has its bearish signs of its divergence. So it's not really showing any clear signs, but China stocks or HSI is also showing bullish signs going into this week. So I'm leaning more bearish if I had to choose, but there's a lot of data, anything can happen, but I am leaning more bearish for this week. So we'll see what this week has in store. If there's any stocks we need to cover, go ahead and drop in the chat. Preferably drop in the actual chat so I can actually read it, because if y'all type stuff in the live stream, I don't know how to see that. So wait. Yeah, no, I can't. I can only write something in there. But I'll give you a few seconds to type out any stocks you want me to recover real quick. And if not, I'll end it here. So. All right, well, I don't see any requests. So I'll end this one here, and I'll send the recording in the chat. All right, let's have a nice week. A lot of news, so be ready.